All right. Hey, everyone. I'm here today with Keith Kaplan, the CEO of TradeSmith, one of the MarketWise companies. Keith, thanks for being here today.
Thanks, John. Great to be here.
Yeah. So kind of the reason, the genesis of this discussion was a little bit about the concept of trading tools, which in FinPub has not been something that I'd say over the last, almost the entire last business cycle, as a product class hasn't been really grown or dominated in terms of just the product sales. Everyone's selling newsletters and subscription models and services, but you guys, you have a tool business. And then more broadly speaking, I think that the lack of tools in our product catalogs, in trading tools in our product catalogs, is actually a huge gap. And so that was the reason we wanted to have this conversation, because you have built a great business in that space, and just I wanted to bring that element of the discussion back into the industry. So in that sense, I'm excited to have this conversation with you.
Fantastic. Me too. I'm normally interviewed about the stock market, asking what I think is going to happen and those sorts of things. So being able to step back and just talk about the business is really exciting to me. So I'm ecstatic to be here. Thank you.
Cool. Do you want to give everyone just kind of a brief bio on yourself, and kind of your background, and then explain TradeSmith as a business to folks?
Yeah, absolutely. You know, a lot of people probably don't know me just because of the way I started in this industry. So about 25 years ago, I started creating software for really big companies doing business to business type of software development. Really sophisticated stuff for the Fortune 100, 500 companies, a lot for people like Walmart, Pepsi, GE. And to be honest with you, after doing that for about 15 plus years, I just got tired of creating things that were, you know, legendary in a space that I was in, but never helped the individual person. And for me, in November 1st of 2013, I woke up one day after a really successful career and could not pay my mortgage because of the amount of debt that I had amassed over the years, really terrible investing mistakes that I'd made. But here I'm a pretty sophisticated software architect and mathematician kind of guy, but I couldn't figure out my personal finances. And so I went on this quest for financial literacy and, you know, was able to dig myself out of debt, do it the right way and all of that. But I had decided I just really wanted to start building software for the individual person, and that sort of morphed into the individual investor. I had an opportunity to join Stansberry Research back in January of 2015, and I took it, and I'm extremely glad I did. And what happened was I really came there thinking I was going to build software, and a lot of people don't understand that building systems is much different than building software. So what I started doing was helping Marco Galsiman team finish up the creating of new tools and new systems to get us off of Agora systems onto a brand new set of systems at what was called Beacon Street Services at the time. But really quickly, I, you know, fell in love with this world and was asked to create a portfolio tracker about 6 months after I joined Stansberry. And the way I build software, which I think is really important for people to know, and because it is not easy at all, but it's also very easy to screw up. And so what I mean by that is the way I build is I have a very lean model type of strategy that I employ to try to build as fast as possible on top of a great foundation, usually in a month or less. So that way I can bring one really cool thing to market and see how it's responded to. Typical people will build something for years and years. So when it comes to something like a portfolio tracker and starting from scratch, I said, well, why would I build that from scratch and take a year to build something that simply just tracks investments when everybody out there has already done it? So what I would want to do is take something that exists and make it much better, but more tailored towards Stansberry at the time. That led me to find TradeSmith, because TradeSmith had a portfolio tracker, and at the time Beacon Street had a 75% ownership of TradeSmith, which is now 100% as of early 2020. And so I fell in love with TradeSmith. I started officially working there in the end of 2017. I became the CEO of it about 2 years later in October of 19, and I haven't looked back. And TradeSmith, for anybody who isn't familiar, started out as a simple trailing stop tracking website back in 2005 called TradeStops. And over time that evolved. And when I came in, I did a couple things. Number one was I took the product as it existed and turned it into a foundational platform where TradeStop sits on top of a platform that has security built in, resiliency. So if anything goes down, it comes back up. All of the data access, user access, all of these things that you need to run a product. I took that and compartmentalized that so that TradeStops was really just a set of features on top of a platform. Why that's important is it allowed us to go create a whole ton of other products in a month or less each time to test them out with the market, see if they'll sell. So with products, if you can build them fast and you just focus on what problem am I going to solve, and you solve it, people are going to buy it like crazy. And so I'll just pause there, and that's sort of a really fast background of Keith and TradeSmith.
No, that's fantastic. That it opens up a bunch of different lines of conversation that I wanted to have here, very, very specifically. I think one of them is kind of to work backwards is that what you just said there, that if you have a product that people can actually use and implement, like they buy it very, very well. And as a category, I think it's very ironic that in 2023, start 2023, that in what is essentially the FinPub industry, in kind of do-it-yourself trader industry and investor industry, that the tool aspect of the product category has thinned out so much because the newsletter education piece has exploded. But the reason I find it ironic is that, you know, anyone who's been around long in this industry knows that, like, in the early 2000s, Investools was the agora of the day, right? It was the 800-pound gorilla in the room. And their model was very interesting in that they had an education component, but the education component educated you on the use of their tool. And the tool was subscription-based. And that model combined with kind of the marketing model, I mean, you know, I think it was 92 million a quarter was their kind of at their peak. And they got rolled up in a couple of acquisitions, you know, I think it was it Thinkorswim or TradeStation that acquired them, and then was acquired by TD Ameritrade.
Yeah, they eventually made it to Thinkorswim. Yeah.
Yeah, and to me, you know, that model stands in contrast to the pure subscription newsletter model. Not that it's better or worse, but that the size of the market that they had was very substantial. And for the way I look at it from a marketing perspective, I think of a continuum between the do-it-yourself trader and investor and the done-for-you. And this is in every customer category, really. Like the done-for-you side of any business model is higher in terms of the scale, the revenue, like the amount of the audience, right? And we serve the lowest piece of the market in terms of the size of the market. The people who are like, I just want the information, I'm going to do everything myself. And with newsletters, and that's a very substantial part of the market, but that's because the market itself is so big. And so I think the tools piece kind of moves the business up that chain towards done for you in a way that expands your market, your possible market. I mean, would you like agree with that assessment in general, or?
Yeah, totally agree. The way we formulate our tools, our different products, is that we are looking to figure out how we can do everything for you, but then do almost nothing for you and become an information edge for you. And so when we think about how we develop our tools, we want to be able to get people who've never invested and help them invest. And typically they'll already have a 401k and they can synchronize that with our product. We can start to tell them, hey, this is a bad investment. This is a great investment. This is how much money you should put into this investment versus this one. All the way to the people who want to use our tools and change them for them, right? Build new screeners off of our tools the way that they like to invest, but they want to use hedge fund level type of insights that our software provides to be able to do that for them.
Yeah, so that, I mean, it seems like by doing that, you're able to be more integrated into the decision-making process and like the actual experience of investing that the customer has. Then.
Absolutely. And we're also a lot more complementary to the newsletter space, right? So like you can get newsletter access in our systems, which would just be the picks. As long as you have a subscription there, we can connect to the newsletter industry. And then you can start to build world-class portfolios off those picks. So it's the best of both worlds. You get the infotainment of the newsletter plus the pick, but then we can help you put that pick into your portfolio the right way.
And to be clear, you do that, like, you're not connected to the brokerage accounts, you're not involved in that piece. So it's very much the user is still making the actual trades, right? Just from a regulatory standpoint, right?
Yeah, so the user executes the trades, but we do connect to brokerage accounts and they
Okay.
synchronize with us. And the way we do it is in a way where we don't have their username and password. That's a negotiation with the brokerage. We get what's called a token that allows us to communicate after that initial send. And every single night we download any changes to the portfolio, buys, sells, whatever you're doing. And then that way we can run analysis for you. So think about if you have a portfolio and you're using our tools, you make a whole bunch of buy decisions today, they're in our tools tonight. And so then you find out tomorrow that your favorite newsletter editor puts out a buy on, let's just say, Apple. Well, you can leverage that right inside of our product. We'll alert you that your newsletter editor did that. So even if you missed their write-up, their newsletter, you at least get that information from us at the same time you would get it from them. It's a smidge delayed, of course, right? Because they have to put it into the portfolio tracker and then we absorb it. But then you can go in and you can sit there and say, okay, how do I add Apple to my portfolio? My favorite newsletter writer, I just did all this work yesterday, and then my favorite newsletter writer says buy Apple. You can now, in a few clicks, figure out how to put that in your portfolio, but then you would go to your brokerage account and execute the purchase.
Okay. All right, great. So then I would think that I don't know, increase in the usability of the newsletter. And I don't know if you have this data at all. I would imagine that that's going to change the retention rate. In my thought process on that for the newsletter itself, not just for you, but for the newsletter itself, because one of the issues that we have with customers is that they'll buy a bunch of stuff and then they realize, hey, I'm not using this so much. Maybe I have 5 subscriptions, 10 subscriptions now. I don't read it all. And I would think that, like, I mean, the usability piece it's like, it doesn't matter how great your picks are if nobody's actually making them. And they're like, oh, I missed those. Now every time I open my subscription for you, I'm just pissed off because I realized that I missed the thing that I was supposed to do. And then of course your next trade is never as good as the best trade that they just missed. And so, like, I don't know if you can see that data or if you have any anecdotal experience, but I would imagine that this kind of usefulness would add to that, retention of the customer.
Absolutely. Our worst retention rate for TradeSmith has been 70%. And so when you look at the newsletter space,
is that year over year?
Year over year. Typically in the newsletter space, you'll see 20 to 30% as retention.
Wow.
But beyond that, we have lifetime values of people after they buy a TradeSmith subscription for all of MarketWise. Obviously, we see all of the MarketWise data. And so we have that sort of data at our parent level. And we've been able to figure out that as soon as somebody buys a subscription to TradeStops alone, it makes the other newsletters better. Those newsletters get a stickier rate of return, and TradeSmith itself gets stickier. And I think one of the key points there is because we have portfolios in our system, and because we understand the newsletters, and then we build tools that bridge everything together, it starts to take actionable information and actually makes it easy to take action on it. And I think that's why we've been so successful with our partner events, because not only do they generate more revenue for those events than something else you might market to your list, which is usually how a marketer would check off, hey, this was successful, but it then creates stickier customers both ways. It's like you did a service by getting customers into TradeStops, and then we do a service by keeping the newsletters in the forefront and helping people to make great decisions with their newsletter picks.
Oh, that's great. 70% retention rate, though, like that is such a dramatic shift from the kind of higher churn newsletter model, which I think is another thing that speaks to the power of tools in general. I mean, it's kind of like you have those two sides of the business, acquisition and retention. And some businesses, especially I would say the more bombastic newsletters, that they move much more towards, like, we're in constant, like, we need high acquisition because we have high churn. And so it's all and like there's some publishers who, and I think it's for a variety of reasons, both regulatory and market environment has shifted away from that right now, but we know like cyclically that will come back. But market-wise in general, I know this is kind of a legacy kind of viewpoint from Porter, has always had a strong focus on that retention piece in general. And then if you're getting with TradeSmith, you're getting a 70% retention rate on that product, and then improving the retention rate of other subscriptions, that's going to have a compounding effect across the whole business, I would imagine.
Absolutely. And I think that, I think one of the just important things to bring up, and especially since you mentioned Porter, it's all about quality of the product. And you can't just retain people because you have a quality product. You still have to convey it to them in a way that's really important. But Porter did report cards many years ago to tell everybody the quality of his products. So he hired some of the best analysts you can possibly hire, does things like gives you the transparency in the report cards, which amazes me that people don't believe them, but they're as transparent as it gets. And Porter even gave himself an F one year. So it's transparent. And that's one of the things that you can do around our industry is if we can deliver upon the claims that we make in marketing, it makes it a lot easier to retain. And then if we can help people make better decisions and give them better products on top of that, they're going to retain at a higher rate.
Yeah, that makes sense. That actually reminds me, there at one of our London events, we had a copywriter, Angel Suarez, who had great successes. He had this really great point, and it was simply that your customer, when he's pissed off, he doesn't want a refund. What he wanted is the product to do what you said it was going to do.
Yep.
Like he wanted the experience that you promised him in the newsletter. He doesn't want the refund. He wants it to work. And I think that's something that we tend to forget. It's like, oh, they just want a refund. It's like, no, they want their money back because they don't feel like you delivered on the claim. And that quality of product issue is kind of fundamental to all of it. So so running, it's interesting the position you're in, because you're running essentially a tech business inside of a publishing ecosystem. And so you're going to see very different, everything from like the business model, the marketing models, the on the back end, like kind of like, I would imagine, like I'm kind of blown away that you're able to produce product like tools and things like that in a 1-month turnaround time, because that's been, I would imagine, that one of the limiting factors on how when people think about, hey, I want to have a tools business, is kind of the speed of new product, because we know that the back end product, like if you're not launching back end product, then you're not just losing profit, but like your business starts to degrade, because this business works quite a bit on new back end. Yep. So what would you say is kind of the most fundamental differences from an operational standpoint between running a tools and tech business versus running just a pure subscription education business?
All right, great question. So in the tools and tech business, we have to take a large upfront expense to build a platform. And software engineers are not cheap. Even when you outsource it, they're not cheap. But once you have that platform, that foundation, that you can build what I call feature sets on top of, and those feature sets become products. Okay. So once you have that foundation, it's a lot easier to build something, and there's very little maintenance that goes into it if it's done right. And so when you think of that, it's almost extremely cheap. And I'll give you an example of what I mean by that, to build something that you can get scale out of. So you don't even have to make that much money off of it to say, was it worth it or not? What you don't need are a bunch of analysts, editors, proofreaders, all of that sort of stuff. Now, you have to convey the product in a way that people want to buy it, and then they want to use it and keep it. And it's a lot harder when you're not communicating with them, when you're not pushing information. So we typically will push a lot of information to them, but it's more in the form of education, teaching them how to use something, reminding them with copy points of why they bought it in the first place. So that sales message always has to carry through, right? Like if we say we're taking the emotions out of investing and you do it this way, now you signed up, we need to tell you, you need to do this way because you'll take the emotions out of investing. Remember why you signed up. So it is harder to get people to use something when they have to pull it, because you're not pushing the content. So we do adopt a model where we push things, but we have a very scalable team to do that. And so with the software tools side, building quick, I'll give you the first example I put into place at TradeSmith. So I joined about December 2017, and I was essentially doing two jobs at once. I was working at TradeSmith, but I was trying to wrap up things that I had done for that services group over at Stansberry at the time. And there was sort of debate on like, where is Keith more valuable? And so I just had to do both to prove it. Okay. And that's something I would always recommend to people. I essentially was working for free to TradeSmith to prove that I could do something at TradeSmith that had more incremental value than anything I could have done tying systems together, right? Like that's not fun to me. I want to build software. And so what I did was the end of March of 2018. So I'd barely been there. And my first thing I was doing was helping the team reformulate the platform so we could build products on top. And so why is that important, by the way? Well, it's important because if I want to put a table on a website and I already have a table that exists that's a template, I can build that table on a website in minutes. If I want to put data inside that table and I already have data accessible, I don't have to go out and figure out how I'm going to put data in the table. I already know. So all I need to do from that point is build what we call a query, which is really an algorithm to do something to put the data in. So the very first problem I solved when I came to TradeSmith was we had trade stops, and that's outside of building a platform, but a problem in the sense of building something somebody wants to buy. We had trade stops, which helped you determine when you should buy something. So let's just say Apple. When should I buy Apple? Is this the right time to buy Apple? Okay, that's a momentum question. How much Apple should I buy? That's a position sizing risk question. And then when should I sell it? I need to know that before I buy it. Okay, so trade stops solved that, but trade stops didn't tell you what to buy. Okay, so I've been in love with factor-based investing, and what it does is it measures different factors of stocks over the past, let's say 60 years, 50, 60 years, and it tells you what factors lead to outperformance. And it also tells you that when you have two factors that aren't correlated, they will give you greater performance. So I said, okay, what's the best way to tell somebody what to buy? The number one way I could see was a factor-based investing approach. You can't sell that. You can't sit there and say, hey, you've got to go introduce factors into your portfolio and only buy stocks that have great factors. You have to just do it for them. And then you have to show them in back test that this will outperform anything they did. So I said to the team, we have 4 weeks and we're going to do two things. Number one is we're going to show people the true health of the market, because I knew this was a big selling point. When you look at a chart of S&P 500 on Yahoo, you have no idea whether or not you should buy right now, buy stocks or sell stocks. So we built really cool bearish and bullish alerts on the entire market. And we told you when you log in exactly how the market was performing by telling you each individual stock inside of that index. So the S&P 500 has something like 508 stocks, but it's 500 large cap companies. We tell you how well they're doing. And then we tell you, are they moving to all do better or worse? And that's a way better indicator than looking at a chart. So that was the first thing we built. The second thing is we employed factor-based investing strategies to give you stock picks. And then we back tested them to make sure those strategies were right. So in literally 4 weeks, we went from an idea that I explained in a few days to a bunch of engineers. And then we wrote how the UI was going to look on a whiteboard. And then we said, go build that. You have 4 weeks. And we broke it down into 1 week chunks. And we scheduled the webinar 2 weeks in. So it cost us about $50,000 to achieve that. And I had a couple rules. The site did not have to work all the time. Okay, meaning I cared less on whether or not the site was up. And we've never had site downtime, but you have to explain to people what's important. The most important thing is that our data is 100% accurate. So if it's not always available, whatever. But if it's not accurate, we failed and people are going to refund. So we launched this. We had no credit refunds at the time. They were cash-based refunds. It took us about $50,000 to build this, okay, on top of an existing platform. But it looks like it's a brand new site. You wouldn't know that it's built on top of a platform sharing data and all of that. It took us $50,000, 4 weeks to build. We did $3.2 million on that webinar. It was a week of sales, so it wasn't just the night of, but we did $3.2 million. And we had a refund rate of 8% total. Okay. Wow. We did 2 more releases that year. Each release got 4 weeks and had a bunch of features. But as soon as we were done that, so imagine we did 12 weeks of building and still had no editorial support, none of that. And we spent about $100,000 total We did almost $8 million net sales that year in 2018 on that product.
Wow.
And that was not because we had a great list. It was because we solved a great problem that the list had.
Hmm.
And then we did it in the most efficient way to test it as we went. And because it was so successful at the end of that, people said, well, what are you going to do in 2019? I said, a different product. Why? You got to keep going here. And I said, well, what could we possibly add to a product that is there to generate ideas and tell you how the market's performing? You can't add anything. Like, it's done. So normally people might take years to build a product like that, and it would have all this bloat. You would have no idea how to use this thing. But when you build exactly what somebody needs, whether they want it or not, but they need it, and then you convey to them in copy, which is very traditional in our space, you convey to them in copy why they need it. And then when they buy it, you tell them why they still need it, and you help them be successful with it. It's a home run.
Yeah, I mean, the marketing piece of that, like when I step back and think about what you're offering them, you know, a lot of what we're selling people is confidence that they know what the world is going to do, or kind of a worldview that you're selling them, like you know, an element of certainty that, except often it's like the guru has the best connection, he has the best system, he has the best whatever. And that works really well. But what you're selling here, it sounds like, is you're selling like a data model to offer certainty. You're saying like, no, look at the math, look at the science, basically. And that's a very appealing model, because we do kind of associate, it's like one of those like click word things in the brain that, oh, well, the math says this. That means I can have confidence in that decision making, because it works so well. And it's such a great model for the way that the world works. And so that to me is a really interesting piece, that the way that you conceived of that product, and how you're able to give them a level of certainty that, you know, obviously nothing is certain in the markets, and you can't promise that it's certain, but like it's more like the methodology that you're using to provide that certainty is very clear and direct, and that's what the emotional payoff is. Is that I can know that, okay, that statistically speaking, this is going to work better than some other approach, and that's really attractive to people. And that selection process, because even with all your newsletters, you still have a selection process. Like, I have too many things. I have more stock picks than I have money to invest. Basically, if you get a hyper buyer who's buying a bunch of stuff. And so your webinars then, like, so you have a list. You guys you've grown with these partner webinars though, haven't you?
Oh, big time. You know, it's funny. We've put out front ends, right? So one of the most natural things in this business is, how are you going to grow your file independently? Well, the most independent way is you put out a front end. And if the metrics work, you just scale it, and you scale it as high as you can. The problem that we've seen at TradeSmith is not, can we sell it and do we get a great cart? Both of those things happen. We never quite get the scale that you see on big front end promotions, but we're also touching more sophisticated, I shouldn't say sophisticated. We're touching investors at a different part of their life cycle. When you cast a wide net, you have some big macro type of guru out there casting a
Hold up,
stock.
I just lost your sound for a minute. You came back in.
Okay.
Now you're back. Yeah, but I'm gonna have to edit this just so you maybe start at that life cycle piece again.
Okay, cool.
Sorry.
No worries. Okay, so what happens is you typically get a customer at a different part of the life cycle than you would if you were casting a wide net. You have a big macro guru analyst out there. They get somebody who's never invested in a stock, all the way to people who have tens of millions of dollars and self-direct or have a money manager, whatever it might be. So for us, it's one of those things where we're looking at this and we're saying, okay, when we do a front end, we have great success, but we never get the kind of scale that you would see in a newsletter world. If you see a front end get 100,000 new customers, we might get 20 or 30, but we'll probably get them to a point where they can be very profitable for us from an LTV versus our CPA in no time. And you don't always see that inside the newsletter world. So we get what I would call micro scale on a front end, but the back end has just been crazy for us. we do events with partners, and I can't, unfortunately, I can't cover 2022 results because they're not publicly available yet.
Right.
But if I look at 2021, we did tens of millions of dollars with different partners all combined. So that's the Oxford Club, Banyan, Stansberry Research, Investor Place. I apologize if anybody's watching. We did something in 2021 and I forgot you, but we did tens of millions of dollars with them. And every time we did those events, the marketers said we made way more with our rev share than we would have sending our own product. And that's what's important about those. But the reason it works is because we show up on a webinar and we talk about how to make that newsletter much better for you, the individual investor. And what we're doing is we're giving you a solution to make that newsletter better. But this solution is not another newsletter. It's something you log into and you interact with that makes newsletters better. So if I just partnered with somebody and said, hey, I want to sell you my newsletter, like that event should do pretty well because that partner will know how to endorse, how to sell it, and all of that. But man, when we show up and we say, we've got something you've never seen before, and it takes this person that's sitting next to me, it makes them much better. And they were already great. That is what makes a huge difference. Like when we did, Alex Green and Steve Sugarroot have a pretty similar experience with a 20-year-long history of investing. And we had the same exact message for both of them, but the numbers are a little bit different, where it's like, look, Alex Green went and beat the markets for you. He did 2-3x of the S&P 500. So if you just look at the fact that individuals underperform the S&P 500, but Alex doubled or tripled it for you, that's incredible. You don't have to do anything else. But if you want to double and triple that from there, I'll show you exactly how to do it. And so that's where the tools come into play and makes those newsletters even better, because guess what? Alex, Steve, Brian Bottarelli, we did an event with them as well. All of these folks are still human at the helm, and the machine helps make the humans better.
Nice. So you're basically coming up almost like customized tools to taking the data and applying it to the model that the guru has, and basically taking the cream of that for the user.
Sort of what we do is we're taking our existing tools, but we model the tools. We model the data that we use in a webinar off of the portfolio. So we do what I would say custom data study, which sometimes is harder to do than building a product. I'm being honest with you. Looking at a track record and we have to build custom programming to figure out how we could have made that better had we been there in 2000, 2001, 2002, how our products make that better. So it's actually a lot of work that goes into these events, you know, and that's why we do have to be selective, unfortunately, but it's a lot of work that goes into these events. But then we're selling our product as the solution in those events, our existing products.
Right.
Now,
right. So
sometimes we do something custom, like Karim Rahmatullah. I'm sorry if I'm saying that wrong, Karim, if you're listening, but we built a custom tool for one of the webinars we did for him. And so the idea was you buy this product of ours, you get Karim's custom tool that he always wanted to build for you, but he doesn't have the chops to build it.
Okay. So you're partnering with people on an affiliate basis and promoting to their list and kind of going in there. Do you do affiliate partnerships in the other direction sometimes too? Do you promote other people's products at times, or because I imagine
absolutely.
You kind of had a reputation as, just so I can say this, TradeSmith has a reputation as one of the better lists when you guys can't promote for somebody else on a, you know, partly because your customer base is the customer base of all of the industry, in that sense, that people who come in tend to be I would imagine, like the people who buy your product are newsletter buyers.
Yeah, they're two things, right? They're newsletter buyers and are real investors. Right? You follow me? So they've moved that chain. They're buying and selling stocks, options, bonds, cryptos, whatever it might be. And we support all of that, minus bonds. We don't support bonds, but we support all of those different asset classes. And so, yeah, I mean, we are getting these customers and we typically sell to our list in one of three ways, which is pretty standard. The first one is we just send dedicated emails of a partner, front end or back end. Those do pretty well. But what does even better is I'll sometimes put a 2-3 minute lead on why this is a new, really cool, whatever that you should look at to help drum up more business. And then the third way is a fully integrated, I'm addressing the TradeSmith audience promoting somebody else's product and we have custom copy going the other way.
Hmm.
So we do both ways, right? Like we say, hey, sophisticated investor, you need this person's newsletter, right? And we do a sweet deal. We'll sometimes throw something in,
Hmm.
to help the sale. So we absolutely go two ways.
Oh, that's awesome. No, I think everyone knows, and I know you're not going to get into the 2022 results, but for the rest of the industry, we all know that for everybody, we had this wonderful boom period for during the pandemic. Everybody kind of scaled up to absorb all of that opportunity, and then 2022, like, things just kind of did the worst thing that it can do for our industry, which is go uncertain. Like, I almost would rather have like full crash than uncertainty, because at least you know what you're doing then.
Yeah.
And things are, it's turning now, and we're seeing a lot of bright spots. But I think that everyone's realized again that, just like after 2008, partnerships and partner promotion and affiliate promotion is more important during this period than ever, because of how much more difficult it is to scale with the paid media side. And so, like, I think that's one thing. That's one of the other reasons I wanted to have you on, is that the partnership marketing model is, I think, more critical in this period of time than it is at other times. And so, I think anyone out there who's interested in doing exploring a partnership with you should, like, reach out. I know Suzanne's on here who they can reach out to, but I can make any introductions that I want, or anyone wants, to you guys to kind of talk about that, because that model is kind of a saving grace when everything else isn't working.
Yeah, I mean, in reality, look, our front ends across our industry are typically loss leaders. And the way you make up for them are twofold. One is renewals, but that takes a full year. Who wants to wait a year? The other way is monetizing on the back end. And a lot of times it's hard to sell another newsletter to a front end newsletter buyer when they're still trying to acclimate, and they're scared to pay more than $49, $79. They don't want to go all the way to 1,000, 1,500, 2,000. And so one of the things that we're always going to be successful at are those partner events. In the good times, those partner events could bring $5 to $10 million. In the bad times, we want to crack $1 to $2 million for that partner. And a lot of times that's how they make up for that front end spend when they can't monetize on the back end. So we still have a solution. The solution is still great. The copy is tailored totally different. It used to be the exact day to sell would be the big message. The exact day to sell, or how to get 4 times out of your existing investments without buying, penny stocks, options, cryptos, whatever. And so we'll change the message. How to never screw up again, what we wouldn't say it like that, is really the thing, and how to basically make up for the lost time. Those sorts of things. And so, like, last week I filmed with Ian King at Banyan, and then separately I filmed with Luke Lango at Investor Place. 2 fantastic guys and very easy to film with. And the messaging there is much different. It's Ian saying, I wish I would have done that. I had something that was a 200% winner that I sold for 50% winner, where I sold it a 15% loss. I wish I would have had it locked in as a winner. And these tools would have done that for me, and they can do that for you.
Nice.
So it's different messaging, but you're right. You're losing money on the front end. So then you start to sort of, you take down your scale of the front end, right? Like, you descale it. And then all of a sudden you're not making money on the back end. So you watch your business just start to compress in ways that never existed in the past, like since probably 2008, 2009. So as marketers, we've all got to figure out, how do we monetize our lists in an authentic way that's not going to bite us, but it's going to help us.
Yeah. And it's interesting. Like, I've seen people make this mistake, and I was around 2008 and I saw it happen then too. People who stop acquisition when the market gets rough, like, it's like holding your breath because you can't breathe, right? Like, and it's like, you're gonna create a second recession for your business, because right now it's really hard, but without lead flow and customer flow, then 6 months down the line, when things get better, you're still sucking wind, because you haven't kept the acquisition going. And it's a really hard thing to deal with, because if you don't have the cash flow to acquire, your only option is affiliate partnerships and partnered events. And I remember, like, back in 2008, there was an explosion in the trader education affiliate business, because that was the game for a while, because it was so difficult until things kind of picked up again in 2010, when we started to see things like End of America, and like
Yeah.
the ad costs had come down, and we got the messaging right. But then the other thing that just that could you talk more about like change in messaging that you've seen over the like 2021 to this last year into now? Because I think it's really important.
Yeah, I'll step back further. So in the beginning of 2020, things were amazing. I mean, they were amazing in the beginning of 2020. And then I'll never forget, we started to hear about this virus, right? You know, obviously we know what it is now. We started to hear about this virus, and the jokes were the coronavirus, right? Like the
Yep.
cerveza virus, right? Corona cerveza, you know, and it's like we were so unknowledgeable about what was going to hit us in this industry. We were basically naming it a Mexican beer. You know, I remember this, like many people had all these jokes. And then where shit got real for us was on February 27th of 2020, before shutdowns ever happened, before masks were a thing, our system said a bear market is coming. And we do that by that one product I built in 2018 that has big bearish alerts. And it had always been right, and I didn't believe it, but I executed. I sold all of my stocks when that hit. And so what happened for us was, not only did that happen, but then we had the V-shaped recovery, and we called the bottom with our tools right after it bottomed. So then we had a big bullish alert. So for us, the messaging went from the exact day to sell your stock. So before 2020, there was always a little bit of concern that things are getting too good to be true, and I need to know when to sell my stocks. So we went with messaging of the exact time to sell your stocks was crushing it as a partner, right? Or like for our partners. Hey, Steve Sugarroot, this product will tell your customers the exact day to sell their stocks. Now we had the V-shaped recovery. So then our messaging no longer worked with the exact day to sell your stocks. And it didn't even work with, this is how I got back into stocks. Okay, like that wasn't quite working right in April of 2020. What began working was how to recover your losses using our products. And so the message was pretty similar. It was like, you know, we're going to tell you exactly how to recover your losses, and we're going to show you examples of how this product would have gotten you out of the markets, back into markets, and then told you what to buy. And there's a whole set of things, a whole set of buys coming up, and the markets are going to, you know, soar from here, right? We didn't all know what would cause it to soar, all the people locked down at home and all that sort of things.
Right.
But our product, the technical indicators were saying we're going to soar. So now people are getting into recover. That was in I'd say the summer of 2020, that worked amazingly all the way through about November. Then it became how to when I say 4X, I mean 4 times.
Right.
4X your investments. And that was only because we were doing these studies on these newsletter profiles. And because we were able to get out of the markets and then back in, we were able to trump the results and turn their results into 4 times the results with the same exact stocks, just by timing them better. Just timing them better. So then our messaging in most of 2021 was more greedy. How do you 4X, 5X, 6X your investments? How do you make 1,000% return in a very legitimate, authentic way with the same exact stocks that you already have? So that worked all the way through 2021, and it was working in January of 2022. And I remember this distinctly. All of a sudden, things started to fall apart. This was before we knew about the Russia-Ukraine war. Things started to fall apart in February of 2022, and it was because of looming inflation. So our messaging really quickly, and by the way, I should admit, in June of 2021, we put out the most sophisticated but easy to use options product this industry has ever seen. And I can come back to that in a moment. But in February, we saw it was breaking apart, and we started talking about different copy ideas and angles. And it turned out that people needed income. Point blank. No longer did they want to buy a tech stock because the tech, we had already topped out, we were already on the way down. No longer did they want to buy the 10X moonshot that was going to, you know, 10 times your money. They no longer wanted to buy the crypto that was going to 10X your money, even though crypto was still taking off at the time. They didn't want that. They needed income every single day because all of the supplies, the housing market, lumber, bacon, eggs, whatever it is, was skyrocketing, and people couldn't afford those staples. So for the rest of 2022, and even still today, our biggest theme that we've seen work not only at TradeSmith, but now at a bunch of different newsletters, is this idea of making fast cash, but not in a scummy way, right? And typically it's anything from selling naked puts that have a very high probability of profit, that's something we built into our options product, to also doing swing trading. You know, being able to identify a stock that has a very high likelihood of moving up over the next month, so very short term. And you can play that capital appreciation as an income play.
No, that's a fantastic walk through the different messaging things. Do you? This is one of my, I don't know. I have a whole lot of things that I a lot of soapboxes, I'll say. One of my soapboxes is this connection between what the market is actually doing and what our promos are, and how far too often people are putting out promos that are like, hey, copywriter had an idea, and it has not a whole lot to do with the state of the market. It's, you know, and during a huge bull market, it was a lot easier to do that, especially on the back end. But I think that especially the last year, has kind of reminded everybody that, like, hey, just because this is, you know, great copy doesn't mean that the theme is going to work at all. And so one of the things that I love about what you're saying here is kind of this promotional conversation it sounds like you're having between what your market view is, what your data is showing you, and what you're choosing to test and try. Could you elaborate a little bit more on kind of how you think about that process?
Yeah, absolutely. So we are looking at so just like with software products where you have to solve a problem with a solution people pay for, we are looking at what is happening on the ground for everyday Americans and how do we help them. So what are the problems they face? Well, they're still facing fear and uncertainty. They're facing inflation, even though people are saying inflation's coming down. I mean, 7% year over year is terrible. And that's just what the government puts out, but that's not what we all feel in our pockets. Okay, when we're buying a car at like 15% over MSRP, our real inflation for that new car is probably 25% because we used to get the car under MSRP.
Right.
You know, and so understanding that and the psychology of the person who is going to now open up an ad, we have to connect them from ad all the way to sale on what is happening to them with a lot of research. Now, our research is different because our research is typically proof points of why our system works, which is much different than an End of America type of research. End of America would have never worked if people didn't read that copy package and think that they just got a whole ton of incredible information that was well researched for free. You know, like people would have paid for that package. That's quality. Our quality comes in a different way than a well-researched historian-based type of quality copy. It's going to be, here's how this system can help you solve this problem that you're currently facing.
Nice. No, that's awesome. I do think that's that piece of like, I think just like the whole sequence of how you guys are approaching the customer experience, from product development, user experience, marketing conversation, is really, it's seamless in a sense. It seems like it's a very consistent, tight approach to the customer, which I feel like can often get like it's pretty impressive. It sounds like you're really like running a pretty tight ship. You know, because a lot of times I see that where it's we have this great product. I'm going to hire a copywriter who's kind of wildly disconnected from the product, and see what he does. And sometimes it works, and sometimes it doesn't. And then you have like, now you have a gap between what the customer was expecting and what the product does, because the copywriter has a gap between what he was explaining and what the product does. And this is a bigger problem, I feel like, in the trading space, because you do have people who have like kind of systems. Maybe they're spitting out trades rather than for people, but there's still this problem of like, well, this is what our system does, and this is what the copy says, and so there's a lot of like, I'd say, creative risk in our business in general, just in terms of what works, and then there's creative risk in terms of like not just what's going to actually convert, but then there's the risk of like, does convert on something that's not actually a good reflection of what the product does, and then that creates, you know, refunds and stuff. And so I love the way that you guys are kind of keeping this really tight. From a partner perspective, then, like, what are you looking for in potential partners?
Yeah, so the best thing, the most successful, because I'll tell you, in 2021, there was a group that we did 3 different events with. One of those events was the most money they had ever made on that analyst. The other 2 events were total duds. The reason that happened was because the analyst that they had made the most money on performed really well for his customers. Okay, the other 2 did not. And so the key to success on a partner marketing event where TradeSmith shows up and they're endorsed by somebody, the person with the endorser relationship has to have the strongest connection and following to the file. It doesn't always mean that you have to have the best track record. It's that file will run through walls for you because they love you. They love you. You're authentic. You do have great picks, whatever it might be. So number one, we have to have somebody at a company, and we've done so many of these events that it never will work unless that person is the best known to the file. We have to have a direct relationship with the file. The file has to be big enough for you to monetize on the back end. And the message that we create has to resonate with your subscribers, you being the partner. So we do and it doesn't take long. It takes hours over a couple weeks to get to know the analyst, get to know that business, understand the customer file and where most people came in on, like what are the messages and what is working, what copy is working to that file now. And then we figure out how to dovetail a message into that with a strong endorsement from that person. We dovetail the message in to help you monetize that file. And there's some things that you'll say on camera as a partner that you wouldn't even be able to say. That's what we want you to say. So for instance, a lot of different analysts have worked on Wall Street, worked at hedge funds. They understand the value of position sizing, but they can never have that direct relationship with you to tell you what to do inside of your portfolio. They also believe that their stock picks are the best, but they don't know what else you're buying. So what we have them do is we have them do a dance with us where they have some humility. The market made 50%, I made 75. Look how great I am. Oh man, I could have made 150%. So the humility comes on top of success. We never want to sit there, and now we like 1 or 2 examples where you screwed up and could have done way better versus you did good, but you could have done great. We usually like to focus with, you beat the markets, but you could have done better. And so what we try to do is we try to dovetail in the messages that where we understand your file, but you get to finally say something you could never say. You're basically saying, using this product is like having an analyst over your shoulder, and I would get in a lot of trouble if I told you exactly how to buy something.
Right.
So I tell you what to buy, use this tool to figure out when to buy it, how much to buy, and when to sell it.
Nice, nice. And so if somebody wants to explore a partner event with you guys, what would be the process then?
Yeah, okay. So they would get in touch with Suzanne Lee. I know you're going to give out her information. We would have a conversation to understand list size, the analyst, make sure we understand the analyst's relationship with the list. We're not going to interrogate anybody, but we want there to be a mutual understanding that you got to have a great list and they have to follow this analyst to be successful, this guru analyst, whatever you might call them, to be successful. If you have that formula down, you have that person at that affiliate, then we can help you monetize that backend file. If the file's small, the monetization is going to be small. If it's huge, we'll have a runaway success with you.
Seems pretty straightforward. Awesome. Well, I appreciate this, Keith. This has been a really great conversation. And so thanks for taking the time to do it with me today.
Thank you, John. It was fun and something very different. And I really appreciate you reaching out. Thank you.
Yeah, and anyone who wants to connect with Keith and his team, I'll post some information to connect with Suzanne, or if you know me, just reach out to me and I'll make the introduction. So thanks for being here again. And
wonderful. Thank you.